Buddy, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 10th of March, 2017. Let's look at these markets. It was pretty much a negative week for the markets, except for, of course, you can see here the semiconductors continued higher. They were up 1.38% this week. And obviously, being a part of the NASDAQ, it helped the NASDAQ outperform with a gain of 0.27%, whereas the Russell 2000 continues to be the laggard, and oil had a real rough week, as did bonds. So let's take a look at the charts and make some sense of the action. We will start out, of course, with the S&P 500. And the S&P 500, just let me clear that all off. You can see that the S&PY is still holding above a rising 20-day moving average, and it got back above that 10-day moving average as well today. So looking at a intraday time frame, where we found the sellers here first thing this morning was right near the volume weighted average price from the gap up 2.5 weeks ago. So I think that that's going to be the key for this market to turn its intermediate term trend back higher. That is to get back above this level here. And if we do so, then this will be the most recent and relevant higher low at this point. What we'll be seeing on Monday is that 5-day moving average, even if we just stay in this area, will begin to flatten out. And then what we would want to see, of course, is a pattern of higher highs and higher lows above a flat to rising 5-day moving average. The best case scenario, or the preferred scenario, I guess, would be, kind of something like this: rally up towards that level, pull back a little bit, and then get going. And it would be a buy up in here, and then a stop either underneath this low or whatever the next important higher low would be for the time frame here on the intermediate term time frame, or whatever time frame it is that you trade. We're still obviously in a massive bull market, so don't listen to these clowns that keep calling for a top, because there's no evidence of it. We will go on a little bit more defensive mode if we break back below probably about 235 and a half next week. Back below that level, then perhaps we'll see a deeper pullback, perhaps even as far as down to the 50-day moving average. The volume weighted average price since the election is down well below that, so we can take a look at, for instance, since January 1st, or the 3rd, I guess, it's pretty much right near that 50-day moving average. So I think that would become a magnet if we were to lose ground. But again, there's zero evidence of it at this time, so let's be aware of the potential scenarios, but trade what we see rather than trying to force our opinions upon the market, because that's what people have been doing with the NASDAQ. As we know, we've spoken about the measured move objective, point A to B, then this is B to C, and then C to D was hit right here. Now, just because an objective has been met doesn't mean the market will reverse. It means that maybe the rate of ascent has slowed. We still have a very healthy uptrend in the NASDAQ overall. If we take a look at, even from the beginning of this year, we can see that we've got this trend line here that, it was broken briefly by, through time, but not by a price violation really here. So this market is holding on to its gains rather well, I'd say. You're taking a look at a 30-minute time frame. We did see some weakness here, briefly this week, but it found the buyers right at another important trend line, and that is if you take from right here in mid-February, you can see that this trend line touches along these points here, and that's where we found support once again. So I think that next week our first important level of support will be right here. This is where we broke this resistance. It was tested today and held its support, and we're also came right down to that rising 5-day moving average is where we found the buyers in here today. So I think that the NASDAQ remains much healthier than some of the other areas, and are clearly a leader. What we'll be aware of is if we break down below 130 next week, then we'll get a little bit more defensive, and of course I'll update that every single day for subscribers. If you're following along on YouTube, I'll be back again next Friday, but things change in between, obviously. The Russell 2000, I had put this on Twitter earlier in the week that, that this prior peak right here, which held as support a couple times as well, is also where we find the year-to-date volume-weighted average price. So the volume-weighted average price from the beginning of the year through today is found right here. So it seems like that would be a good area for the Russell to come down to and test. Ideally, it would come down slightly below these lows and excuse me, and then get oversold. That would bring in uh, uneducated short sellers. I'm sure there's a lot of long stops under there. And typically, after a move has been made and it breaks an important level of support, you're typically close by to a at least a short-term turn higher. In other words, the people who wait for a break below that level or wait for a short below that level are the ones that often get trapped. So, going into next week, we still have this pattern of lower highs and lower lows below a declining 5-day moving average, and that tells us we're guilty till proven innocent, and we're going to need, I think, to get back up above this level to take the long side more seriously once again. That is about 137.5 to 138. If we get back up in that area, that will definitely turn this from being pretty defensive right now to a little bit more neutral. The semiconductors, as noted, they closed, I'm not sure, 77.93. This prior high close was 77.82. So today we closed at another all-time high in the semiconductors, and once again, they just continue to torment the short sellers. We found some resistance here this week. Today, we broke beyond that. It was tested, held, and we remain above a rising 5-day moving average. So we're innocent till proven guilty on even the intermediate term time frame. And of course, this longer term trend is clearly super strong uptrend as well. The biotechs. Now, this group was looking. We've mentioned it numerous times over the last couple months that the volume weighted average price from the peak of that big run that it had seen, basically after breaking a long level of area of resistance near that 100 level, we had seen a move up to 400, and the volume weighted average price since that move to the 400 level, you can see actually is right up in here. So let's just redraw that. So we'll take this volume weighted average price tool, drop it right there, and you can see that that volume weighted average price level has been holding as support here this week, and that's what we wanted to see. That is that we broke above this peak right here. We've now got a rising 50, 100, 150, and 200-day moving average, all rising. What that tells me is that we had seen in this market, let's just go back to the weekly time frame again because this is important. We had seen this rising 40-week moving average, and we had seen higher highs and higher lows above it. Then as it turned sideways, it became a stage 3 distribution, and as it broke down, it was a stage 4 decline. And if they don't scare you out on the way down, they will typically wear you out, as they have for over a year in the biotechs in this area. However, now that the market is holding up, and you can see that we are establishing this pattern in here of higher highs and higher lows and prior resistance becoming support, that the tide is changing here. I think that over the next few months you could see the biotechs probably up near 345, 350. I think that the chart supports that. Obviously, you'd have to you don't just buy it and put a sell at 345. There'll be a lot of risk to manage along the way depending upon your time frame. But I think that for next week, when you look at the way this thing is setting up, just the way, look where the buyers regain control, getting back above these 5-day moving averages, we're right there again. So I think for Monday, the ideal scenario would be a slight pullback and then break above about 301 area, and then it looks like the biotechs are in fact ready to be able to move higher. If you're looking for a stop, you would either put one underneath this higher low. Maybe you would give it all the way down to there. Personally, I think that's way too far, but that's my time frame. You could even look at, let's say, a 15-minute time frame and say, if you don't want to put your stop under this level, maybe this little shakeout low from Thursday just below that would be the place. Either way, it looks like the biotechs are getting ready to go. I wouldn't necessarily buy it straight away Monday morning if it breaks above this level, because you have to ask yourself, where has it come from? It's just come from 297 to 301. So it just rallied 4 points in a couple hours uninterrupted. If we could get a slight pullback and then a higher low, and this 5-day moving average flattens out, then I think we're onto something good with these biotechs. So do definitely keep a close eye on them next week. The bonds continue to be terrible, and that should be expected. We've got a longer term downtrend here with a declining 100, 150, and 200-day moving average. Bonds are dead money, and they made a new low this week, and there's just not really much reason to be optimistic there at all. One thing I did want to talk about as well is the the oil market. And let me take a look. Where did I put that chart? Here it is. So here we see that, well, that's not the one I was looking for. Um, Okay, so this oil, this red candle occurred this week, and you can see that, oil had been behaving well. Now it's in pullback mode. I think that next week you're likely to see it come down towards this trend line. That's basically, the trend that it was established early 2016. So it looks like oil is likely headed for that trend line, and that, there's problems with oil basically. So that doesn't mean there has to be problems with the rest of the market, but it's just something to be aware of. Some trades that we had this week included ATVI. We got involved right in here, I believe, or I'm sorry, right here is where we purchased it, and that was at 47.18, I believe. So that one's starting to move nicely. We are also in BAH, BLDR. A couple names that I would say to keep an eye on for next week would include Wynn Resorts. I think I mentioned this one last week. It's still not ready yet, but we're starting to build energy here. We've got these higher lows coming into it. We've got lower highs. So energy is building. This could be called a triangle. We've got all those longer term moving averages coiled up in there. And we've got this little band of resistance that's just recently formed, about 103, 104. Looking at a shorter term time frame, you can see that, well, let's just go back to the daily. Here on this daily, we saw a gap event right here, and subsequently it's pulling back, and now it's just starting to stabilize. Well, we're stabilizing right at a rising 10-day moving average, which is above a rising 20, which is above a rising 50-day moving average. And as we've noted, we have this shakeout low, a higher low, another higher low, and this band of resistance up here, which is being tested with more frequency, and the time in between is lessening, meaning that the buyers are getting more aggressive. They're not waiting for the deeper pullback. This is looking like it's going to be an important higher low right here, the low that we saw this week. And I would say definitely keep an eye on this one next week, because getting up through this area could set a very nice upward trend in motion here, as it has pretty much gone sideways for a year, building up some energy that, if released, could charge the shares of Wynn higher. Mobileye is one I would say keep an eye on as well. The daily time frame, it's been stair-stepping higher here recently, and just looking at this 30-minute time frame, maybe getting back above the high of this week with a stop somewhere underneath this higher low, or one of these higher lows, whatever's most appropriate for you personally. Only you know that. I would say also keep an eye on Maxim Integrated Products, MXIM. You can see here it's in a nice longer term uptrend, looking at these monthly candles. And on the 30-minute time frame, I think you get it back above Friday's high, that it has the potential to continue. So there's still a lot of good setups out there in the market. TPX is one, a short that I think has the potential to continue lower. You look at, we've got basically 2.5 years of buyers trapped above, and that prior support is now been tested, is acting as resistance. And I think that looking down to, let's look at a 30-minute time frame, and we can get that entire gap in there. And what we're going to do is put a volume weighted average price on it, so you can see that battle for control, the buyers seem to be losing some ground here, because this little band of support is now acting as resistance. We've got a declining 5-day moving average, and we're getting trapped underneath the volume weighted average price from this gap lower, meaning even the people who thought it was a value, they're starting to look at it, and the average price is just above what they paid. So it's the buyer's game to lose in here, I believe, and this is one that you should keep an eye on as a short sale candidate for next week. Have a good weekend, everybody, and I'll talk to you next week. Thank you.